Good morning, good afternoon, good evening, everyone, and welcome back to the Breakfast Show. We have some, well, big news that came out yesterday. Yesterday was a good day for the stock market, it was a great day for Google shareholders. Today, a bit of a mixed bag right now, pre market, unless, of course, you own Google. Because if you own Google, then suddenly you win and you keep winning. Google and Meta, there has been an announcement around that. On the flip side, you have Nvda and AMD that are coming down because of that. Well, basically because now the sentiment is that Google is winning and winning too much. Strange, right? Weird how things change so quickly. We also have a Gene Munster that says that suddenly Google Alphabet is the best Mac 7 name to own next year. Interesting. Maybe it is the top, right? After months and months of him saying that, oh, Google, they can't compete, Apple is the best, everything that OpenAI announced, everything that Apple announced, it was always going against Google. Interesting how that works out. Google stock goes down, so that equals company is bad. Google stock goes up, company is incredible, and it's the best name to own for next year, despite more than doubling over the last 6 months or so. Oh well. Anyways, we have a lot of things to talk about in today's episode. We do have this. Remember, a couple of days ago, the probabilities of us getting a 25 basis point cut in December was around 30%. Suddenly, we're back here above 80%. We're back above 80%, more specifically 82.9% chance of getting a 25 basis point cut in December. That meeting will happen 15 days and 5 hours and 25 minutes from right now. Now, there is also another announcement. Well, not real announcement. We should have gotten the Q3 GDP numbers, the third revision, I believe, this week. Apparently, that's not going to be released because of the government shutdown. Now, some people are already speculating, right? On the one side, oh, they don't want to release it because it's so bad. On the other side, they don't want to release it because it's too good. So if it's too good, we might not get a rate cut in December. I think both of these, let's say, speculations or whatever, Sometimes they do make sense, sometimes they don't. To me, it's a bit ridiculous that we're here in 2025. The number one country, right, in tech and all of that can't produce numbers because of a government shutdown. Give me a break. Give me a break. So, okay, we're not getting those numbers either this week. I do think that GDP numbers would have been quite good. Yes, driven by all of this AI build out and all of that. Fine. You might think that it doesn't make sense. It shouldn't be that way. But would you rather not have GDP growth thanks to this AI build out? I think it's a good thing. But yeah, 2025, I mean, this data should be way more transparent. A government shutdown should not have been the issue here. But okay, it is what it is. We also have some other announcement also with regards to government and AI. In this case, we have this Genesis mission, a Manhattan project for AI. We'll go over it in a bit, but right now let's talk about the stock market. So this is what happened yesterday. Yesterday was a pretty good day. Nvidia was up 2%, Google up 6.3, Meta 3, Tesla was up 6%, AMD was 5, Broadcom 11.1%. Great day, right? Great day for most of our portfolios, of course. Right now, pre-market, what we're seeing is the pullback, but more targeted one. Nvidia is down 4.3%. AMD is down 5.8%. Google is still up 3.8, Meta is up 1.2, and Broadcom is up 4.2%. Now, why is that? Why is that? Well, couple of things. Yesterday, we've had this announcement. Google is in advanced talks with Meta on a multi-billion-dollar deal to bring TPUs into Meta's data centers starting in 2027. The information reports also mentioned that broader TPU adoption could help Google capture up to 10% of NVIDIA's annual revenue. And so, right now, what we have here is a complete switch in sentiment. It was previously, by the way, Google's TPUs are like a 10-year-old story. But right now, yes, right now you are seeing definitely the results of all of these years of deployment and investments, etc., etc. But right now, what we're seeing here is the sentiment switch. We've seen that a couple of times this year with regards to NVIDIA. NVIDIA is still by far the leader. NVIDIA has what? Close to 90% market share, I would still say, 75% margins. And that's the issue, right? That's the issue that everybody is now trying to pick at, is the fact that they are the leader by far and the margins are too high. When you're the only game in town, you can have those high margins and you'll stay the leader. But right now the market is saying, okay, look what's happening right now. Google's TPUs, Gemini 3, all of that seems like they don't need Nvidia. And if Google doesn't need Nvidia, then the others don't need Nvidia, and that's why we're seeing the stock react like this. Now, does it make sense? Does it not make sense? And the same can be said about AMD. That's also why AMD is coming down. Does it make sense? Well, first up, let's go back a little bit. Let's go back a little bit. If you remember, in August we've had this. Google scores a 6-year Meta Cloud deal worth $10 billion. Okay? This was back in August. Google and Meta, we've had that big announcement cloud-wise. Now it seems like they're going to have that announcement purely on TPUs, not hosted at Google, but hosted at Meta. It's a new thing. That's a new thing. Now, what are they going to do with that? Inference training remains to be seen. Now, that's not all. That's not all. If you remember, if we go back a month or so ago, Anthropic, we've had this announcement, expanding our use of Google Cloud TPUs and services. Again, this was a month ago. This was a big announcement. So back then, they're announcing that they plan to expand their use of Google Cloud technologies including up to 1 million TPUs, dramatically increasing their compute resources as they continue to push the boundaries of AI research and product development. The expansion is worth tens of billions of dollars and is expected to bring well over a gigawatt of capacity online in 2026. More positive news for Google, of course. But you can start to see why the market is like, okay, there's quite a lot of positive momentum going towards Google's. What does that mean for everyone else? Well, in that same announcement, in that same announcement, they said the following thing. Anthropic's unique compute strategy focuses on a diversified approach that efficiently uses three chip platforms: Google TPUs, Amazon's Trainium, and Nvidia's GPUs. This multi platform approach ensures we can continue advancing cloud's capabilities while maintaining strong partnerships across the industry. We remain committed to our partnership with Amazon, our primary training partner and cloud provider. And so this is another case of a company, in this case Anthropic, diversifying their approach. They're going to use Google TPUs for probably certain workloads. They're still going to use Amazon Training and Amazon AWS for other things. And in this case, also Project Rainier, or I don't know how you pronounce that. That's a massive compute cluster with hundreds of thousands of AI chips across multiple US data centers. That's also one of the reasons why we're going to see AWS growth continue to accelerate from here. And then they're going to use NVIDIA GPUs, just like the majority of the company on this planet. That's not all. Not that long ago, literally what, a week or so ago, we've had this. Microsoft, Nvidia, and Anthropic announced strategic partnerships. Anthropic to scale cloud on Azure, again, diversifying. Anthropic to adopt Nvidia architecture, first time they're doing this. So if I try to play here both sides, on the one side, the market is saying, okay, Google TPUs, Google is gaining or might gain market share. Their solutions is pretty good, I would say. And then on the other side, we have here, if everything's so good, why would Anthropic then adopt NVIDIA's architecture? Right? Wow. My God, Google Assistant just scared the shit out of me. Whew. Eh, Anyways, then you have, wow, my heartbeat went up like crazy. Then you have Nvidia and Microsoft to invest in Anthropic. Okay, Google, Amazon, they're also invested in Anthropic. In this case, you have a big company, huge company that's growing like crazy across the board. That is just diversifying, that is just using multiple solutions. Okay, wait, this Google guy. Enough. Whoa, enough. It works so well. It works so well, but not when I stream like this. Whoa. Okay. Anyways, I'm still very bullish on Google, but just don't scare me like that. What the heck is this? Um, Anyways, we've had all of these announcements, right? We had Google Meta, Google. Then we have Anthropic, Google, Anthropic still with Amazon. And now we have here Microsoft and Nvidia also Anthropic. We also have here strategic investments. Yes, I know, oh, the circle of life in this whole AI and chip making business. You get some investment with that money, you come back to us and you buy chips from us, and we make money. Yes, these things happen. These things have happened before. Now it's happening on a huge scale because these companies can do it. They can support the ecosystem. They are super profitable. But I would say, yes, that Google is in an incredible position, which is why Google is a huge part of my portfolio, which is why I've been saying that Google is undervalued, is overlooked. Google Cloud is overlooked. TPUs are overlooked. And yeah, I understand now that the market is trying to figure out what the heck is going to happen, right? Google, as we can see right here, has had a tremendous run, has had a tremendous run over the last couple of months. Now, I would be saying, okay, looks extremely extended. I agree, it's overbought on the daily. But it should have never been at 140, $150 per share back in April, or even here in July, 170 or something like that. To me, it should have never been this low. And let's say we go from $200 per share. Even then, the stock has performed extremely well. And all of these moves right here, one of them is, of course, the DOJ case. They don't have to sell out Chrome. They don't have to sell Android. Okay, huge overhead, huge headwind, gone. Okay, overhang, gone. Fini. Great. We go up. Then, purely based on the fundamentals and the business here, Google had to continue to go up. Huge announcements for Google Cloud. Search continues to grow. YouTube continues to grow. Google Cloud grows and expands margins, becomes more profitable. Google Cloud search as a percent of overall revenue for the business continues to go down, which means if this continues over the next couple of years, the reliance on Google search is going to be less than what it was before ChatGPT came out. Isn't that why the business took a hit before? I think so. Am I going to continue to buy Google at these prices right now? Probably not. Probably not. There are other companies out there that have taken a huge hit. Meta, for example, are very attractive at these prices. But Google is here because Google is an incredible company. Google is at these prices. Google is going to be at $4 trillion in market cap. I've been saying this for quite a long time. I think Google should be the number 2 most valuable company on this planet because it's an amazing business and it has been overlooked. Google is not here based on Fugazi. No, it's here because the market misunderstood it. Most of us did not. And now it's getting the respect that it deserves. That's the reason for now. Um, sorry if I did trigger some of your Google assistants as well. Thanks for a super chat here. How do you think Google's dominance might impact the likes of AMD, Nebius, CoreWeave, etc.? Is Google still above these prices? Well, the last part of that question I just answered. AMD right now, as you can see, AMD is also down 6%, Nvda is down 4.6%. Now you put AMD, Nebius, CoreWeave in the same question, they're not really the same thing, right? Nebius and CoreWeave don't make chips. They use chips from Nvda. Well, both of them from Nvda. Iron does use also AMD chips a little bit right now. Now, everything I just said right now can be applied to AMD, just that AMD doesn't have the huge market share that Nvidia has. Also, and this is something that I will add to the whole Nvidia story, chips are one thing, the hardware. The reason why Nvidia is here is, yes, they were first. They have the best chips, they have the networking, all of it. But what do they have that the others have not, or have but might not have it as big as Nvidia? Is the ecosystem, right? It's CUDA. That's the reason why Nvidia is so big and so popular around the world. And so for developers, for companies to start switching from Nvidia, the chips plus the CUDA ecosystem, to something else, to AMD, to ROCm, to Google's TPUs, it will need to be worth it for them. Not just on a cost basis, but it's like a language, right? If 99 or over 90% of the planet speaks one language and you speak the other, for the majority of the people to start learning the other language, well, it has to be for a very, very good reason, right? It has to be for a very, very good reason. And so while I do see a little bit why the market is maybe questioning the Nvidia story thesis right now, although they've been questioning that story for a while, right? DeepSeek, the revenue thing. What else? Yeah, maybe Huawei. Huawei is still a big question mark. I would say don't sleep on the Chinese ones, because essentially AI, right? The whole thing is that AI can be great at chip designing, and if AI is great at chip designing, then yeah, you will have competing solutions. But then again, we go back to the same point: CUDA ecosystem. CUDA ecosystem does not poof appear like this for everyone out there. No, this was years in the making, years in the making. It still remains one of NVIDIA's biggest competitive advantages. Now, as for Nebius and CoreWeave, it doesn't really change right now. Doesn't really change. You still need a lot of data centers. You still need a lot of compute. They'll continue to build that. Doesn't really change that much. And who knows? Maybe they'll start offering Google TPUs. I don't know. It's possible, but probably not. Probably not. So, I see. It's good to know that there are a lot of Google and Android owners here watching the live stream. Very good to know. Very good to know. So yeah, overall, the story right now, plus with Nvidia, of course, you still have that AI bubble. Nvidia is a Cisco revenue ecosystem circling around. OpenAI might never make it. The OpenAI thing is still, to me, the biggest issue here. Now, we've talked about this with Jose last week, is that okay, you have OpenAI first, but now you also have Anthropic. You might have some other players out there as well. So if one blows up, the other one can still become successful, etc., etc. I agree. But since OpenAI is on paper so big, they've already committed so much to many companies. I do wonder what will happen. Yes, when it's in the making right now. Google does continue to become more and more popular. Gemini just becomes more and more popular the better it becomes. How big of an impact is that going to be on OpenAI? And if it's a big impact on OpenAI, then maybe they might not reach the $100 billion in revenue expected by 2030. They might not reach the tens of billions of dollars in free cash flow by 2030 either. It is possible. It is possible because they sit maybe not in the middle like Nvidia, but they sit quite close to the middle of this whole ecosystem, quite close to it. So if they don't manage to grow, right? Because if, let's say, suddenly a million users, or I don't know, making numbers up, decide that actually, look, Gemini 3 is just much better than ChatGPT, I'll move over. Right? There is no walled garden in this whole chatbot ecosystem, at least not yet. With Google, you can say that it's integrated with the whole Google suite. Okay, great. But this is, in my opinion, the big question, is how much of the future success of a lot of these players right now is based on OpenAI's success. That's the big question. That's the big question right now. So we'll see. We'll see. Yeah, Google has an ecosystem of software, but it's not like CUDA, right? CUDA is a huge developer ecosystem, huge libraries. It's not like the Google one. It's not like the Google one. But yeah, no, it's getting very interesting. It's getting very interesting, and I might sound bearish, but I'm not. If we go back to just a week ago, Nvidia's earnings report, there is an insane demand for our chips. Cloud is sold out. But these are not comments from a company that is struggling. These are comments from a company that, if they had more to sell, they'd probably do so. They'll probably do so. And so, yeah, I still think that Nvidia will stay the leader. Does that mean that the others are not going to take market share? No. There is a reason why I bought AMD. If I thought that Nvidia would still get 90+% market share of the next coming years, would not have bought AMD because it would make zero sense. But no, I bought AMD because I thought, yeah, okay, AMD has a very good roadmap, good execution. They'll take market share. It's a market that keeps growing. So they'll be successful. Google, in a league of their own, I would say, on the TPU side of things, great company. But does this mean that suddenly Nvidia is going to crash 60, 70% or so? I don't think so. I don't think so. And again, there is a reason why Nvidia is investing in a lot of these companies, because they say, look, they see huge opportunities in these companies. These companies today, or a year ago or 2 years ago, look cheap. We see a future where they can be worth way more. We're going to help them grow. Of course, yes, they get the money, and the money goes back to Nvidia because they're buying Nvidia GPUs. So Nvidia makes money on that, and Nvidia is going to make money on the fact that these companies are going to be successful and bigger in the future, also making the whole ecosystem healthier, because now the ecosystem is going to be built by companies that are going to be profitable, are going to be fast growing, and contribute to the overall ecosystem. Makes sense, right? We asked ourselves time and time again, Nvidia, so profitable. What are they going to do with the money? The dividend, it's tiny. The buybacks, great. But it still leaves them with a ton of money to play with. What are they going to do with it? So that they invest. They invest in other companies. They invest in the ecosystem. That's exactly what you want to see. It's exactly what you want to see, because yes, you don't want Nvidia to be reliant on just one thing or two things. No, they are becoming, yes, an Nvidia VC, as we might call it. So right now, the sentiment, AMD, Nvidia, definitely not as good as before. But does things change? Did AMD is up here at $200, right? This big jump right here is because of the whole OpenAI deal, right? OpenAI will get 10% of AMD if they achieve XYZ. If they don't achieve XYZ, which means that AMD is going to be generating tens of billions of dollars in revenue, they will not get 10% of AMD. Nothing changed there. Nothing changed with regards to the other announcements that AMD has made with regards to the MI400 series. Hasn't changed. With Nvidia, did something change? No. Only thing that changed is the stock price. Only thing that changed is the stock price right now. And so, yeah, that's the story right now. The story, lots of questions. Nobody really knows. And nobody can tell you exactly what's going to happen 3-5 years from now. You cannot. I've seen, again, Brad Gerstner say and laugh about the fact that, oh, OpenAI is going to be under pressure because of Gemini. He laughs at that fact, but he had zero issues laughing at Google not that long ago because OpenAI was about to destroy Google, right? Brad, if you're seeing this, you still have time to sell your shares. You still have time to sell your shares. So that was part one. I will probably have a recap video for later today for those that don't join the live stream or think this is too long. Don't worry about that. Second topic, real quick, Zeta is up 6%. I do know that some of you are Zeta shareholders. And so this is it. This is the reason why. So they've increased 2025 and 2026 guidance following the completion of the Marigold acquisition. So the updated 2025 guidance assumes they're going to grow 28% year over year, 42% year over year growth in adjusted EBITDA, and 70% year over year growth in free cash flow. As for 2026 guidance, acceleration in growth for revenue, so 34% year over year growth, makes sense. 40% year over year growth in adjusted EBITDA, and 42% year over year growth in free cash flow for Zeta following the acquisition of Marigold. Good news for them. Stock is up for that exact reason. Now, moving on to number 3 here. Number 3 is another company that was hated a year or so ago, and that's Alibaba. and that's Alibaba. Alibaba is up pre-market to $166. They reported their quarterly figures. The stock has done, when you look at Alibaba stock, you can see, right, underperforming for a long time. This was cheap, reminds me of PayPal, was cheap, but the company was doing what it should be doing. Then we had like a China pump here, then a drop, and then at the start of January was at $81, peaked at 148. Then we have the April crash, and then went all the way to $190 or so. Little correction. Pull back to 150. Now we're back at 166. Of course, on this name, this was one of the contrarian moves I did going into this year. So this is basically what has happened. Revenue for the quarter up 5% year over year. Income from operations did decrease 85%. Same with free cash flow. There was an outflow there. They do tell us right here our core business continued to deliver solid revenue growth, with AI revenue contributing to an expanding share of our cloud revenues from external customers, and customers management revenue up 10%. We are reinvesting our profits and free cash flow for the future, while near-term profitability is expected to fluctuate. Over the past 4 quarters, we have deployed approximately 120 billion renminbi in capex towards AI and cloud infrastructure. Now, the whole business is doing much better than previously, but AI cloud is doing very well. So, robust AI demand further accelerated our cloud intelligence group business, with revenue up 34% and AI accelerated product revenue achieving triple digits year-over-year growth for the 9th consecutive quarter. Now, if we go and look at the slides here, let me show you these segments. Real quick. Wait, it changed? Oh, no, it didn't change. Okay, so that's basically it. So this is basically it. Let me actually zoom in. We have here International Digital Commerce Group up 10%, Cloud Intelligence up 34%. We have e-commerce for the China business, which is still the largest one. E-commerce up 9%. Quick commerce is up 60%. That's still a small part, but that's growing quite quickly. Alibaba China e-commerce group as a whole grew 16%, which is also not bad at all. Not bad at all. I mean, this is, yes, I see the comments and I know the China risk and all of that. I get it. But it was very cheap. In my opinion, it's not expensive today. It is growing. The cloud segments here is growing as well. This is despite China being a huge market for them, which again can go against the China risk thesis because a huge part of their business is just China. Okay. Another part of their business, which is also quite big, again, is the international one, and it seems to be growing. Right? It's still growing here 10%. I think it was less than last quarter, though. I think it was less than last quarter. Let's see. 10%. We don't get much news. Okay, it's still fine. They did tell us about the VIP members. That's their highest spending consumer group, continues to increase by double digits year over year, surpassing 56 million. We'll continue to focus on improving the retention of that membership. As for the cloud, I mean, 34% revenue growth, 35% adjusted EBITDA growth for Alibaba Cloud. They're ranked first in China's AI cloud market with the largest share, 35.8%. So again, China risk, okay, but a huge chunk of their business is just China. Is just China. Jose, it's all over. It's all over. Pack your bags, sell your Nvda shares. They're going to zero. It's over, finito, done. Where was I? Yeah, so in Alibaba doing well, doing what it should be doing. People were a bit underestimating the business, in my opinion. Of course, the cloud side has been contributing quite a lot to its recent recovery, I would say. Revenue growth, also contributing to margins, but this business, they're still investing everything they make into into the business again to become bigger and bigger in the future, which is a bit like Amazon. I'm not comparing Alibaba to Amazon, although you can make the comparison. You can make the comparison. You see, Jose, I knew you were smart. I knew you were smart. Moving on to PayPal right now. Yeah, PayPal does not have the bubble risk. I can tell you that PayPal does not have the bubble risk. When am I buying a luxury couch for the live stream? When PayPal is above 100. Maybe then. Maybe then. Maybe then. Is PDD not the you know who, but the Pinduoduo Holdings Timu? Yes, they own Timu. Pinduoduo does own Timu. Let's see if we've got. Well, I did see some news with regards to. We have here, okay, a couple of things. We have here a couple of things. One, for those still in SoundHound, um, I don't think that PayPal has a buyout risk because this is right now what, a $60 billion company or so. Whoever buys them out will pay a premium, let's say 70 billion, maybe more, I don't know, 70 billion. Um, I don't see a $70 billion acquisition happening anytime soon. It would suck. It would definitely suck, but I don't see that happening anytime soon. So, some news here with regards to SoundHound. PayPal, they launched an integration with AI search engine Perplexity that allows users to purchase products directly within the platform's chat interface. The integration between, or the partnership between PayPal and Perplexity has been deepening in recent weeks. In recent weeks, but we've seen them partner with the other players out there as well. We have here a Microsoft a price target at $645 per share. Azure demand, data center capacity is the only limit to revenue conversion. We know about that. Alibaba Group CEO says for the next 3 years, the so-called AI bubble should not exist. Okay. I'm trying to find the Rocket Lab comment because we got one of around, I think, 60 something. We have here one for Amazon, still, I think, a cheap business to own today. So price target $300. Buy rating, they say the following thing. AWS revenue growth accelerated to above 20% in Q3. I think that will continue. $200 billion in AWS backlog, up 22% year over year, excluding any announced deals in October. $38 billion, again, we can say that this is a good deal, the OpenAI one, or this is one that will never happen, but it's a $38 billion deal. Trainium chip business at a multi-billion dollar run rate that's up 150% quarter over quarter. And AWS revenue projected to reach $128 billion in 2025 and $348.5 billion by 2030. That's a 22% compound annual growth rate for Amazon. I did see someone comment this, so I apologize for missing that comment. But we have core PPI results. Actual number 2.6%, forecasted one was 2.7, previously 2.8. Retail sales month over month 0.2%. The expected number was 0.4, previously that was 0.6. PPI not core, year over year 2.7, in line. Month over month 0.3 was also in line. And the core PPI month over month is 0.1%, expected number 0.2, and the previous one was actually negative 0.1. Did the market move because of this? If someone knows, let me. When this came out, if the market reacted because of that, let me know. Ondas is going to acquire a robot team. Ondas was up yesterday. On yesterday was no news regarding the company, just poof, went up, unless I missed something, but I didn't find anything. AST Space Mobile announced the addition of two new manufacturing sites in Texas and Florida as part of its expansion to accelerate production of the next generation Bluebird satellites. I think they're still at $55 per share or something like that. Where is the Rocket Lab one? Synopsis, Tempest AI. No, here. So Rocket Lab, Needham reiterates buy rating, maintain the price target at $63. Now, again, might move the stock back up or not, doesn't really matter. But the key takeaways here are always the same, right? Neutral launch plans for 2026, fine. Electron launch cadence driving revenue and margin expansion, we know about that. Space systems progressing in satellites and components, we know about that as well. The PWSA tranche opportunity, they're watching that situation closely. They see sustainable profitability emerging across business lines. This was just bound to happen. AST $55. Yeah. Yeah, I saw that yesterday. Jeffries cut price target on PayPal from 75 to $60. I guess they maybe were ridiculed by the fact that they had their price target so high for so long, so high, and PayPal didn't really move much. I think they'll be proven wrong and they'll just follow the price when it goes up. Um, Panasonic Energy will supply Amazon with 2170 cylindrical batteries for Zoox. Zoox is their basically Waymo equivalent, but it doesn't really look like a car. That's going to be quite something. Did anyone here in the chat? Did anyone here in the chat go into a Zoox? Tried it out. I know. Don't know if Adam is here, but he's from Vegas. There are some Zooks driving around in Vegas. So if you did try it out, let me know your experience in the comments section below. Now, do I have any interest in Circle? I do not. I do not. Now, this was announced or this was launched yesterday. Genesis Mission, a Manhattan project for AI, and Perplexity basically here summarized all of it for us. So, the Department of Energy will build a national AI platform on top of US supercomputers and federal science data, train scientific foundation models, and run AI agents plus robotics labs to automate experiments in biotech, critical materials, nuclear fission, fusion, space, quantum, and semiconductors. Correct. If you didn't watch the podcast, I highly suggest you go do so. You can find it right here. Let me pull it up. You can find it right here on his account, Daniel. Great follow. It's a 50 plus minute podcast with Nebius CRO, was previously at Cloudflare. Very, very good conversation. Very, very good conversation. I highly suggest you go watch it if you are a shareholder of Nebius or maybe even CoreWeave or the others. Exactly. Right. TPUs have been around for 10 years now, and now they're the whole hype. Although it's because now you're really seeing the huge difference that it makes. Anyways, going back to that Genesis program. So at the core, this is a new American science and security platform. Department of Energy is ordered to turn the national lab system into an integrated stack that provides high performance computing for large scale model training, simulation, and inference, domain foundation models across physics, materials, bioenergy, AI agents to explore, design spaces, evaluate experiments, automate workflows, robotics, automated labs, plus production tools for AI directed experience and manufacturing. This is basically a national scale AI scientist plus AI lab tech as infrastructure. The targets are very explicit and very strategic. Within 60 days, the Department of Energy has to propose at least 20 national challenges in advanced manufacturing, biotechnology, critical materials, nuclear fission and fusion, quantum information science, semiconductors, and microelectronics. Now, doesn't stop there because the timelines here are quite aggressive. So 60 days from now, list of full challenges. 90 days, full inventory of federal compute network storage for Genesis. 120 days, initial model plus data assets, plus a plan to ingest more data assets, other agencies, academia, a private sector. 240 days, map all robotic labs and automated facilities across national labs. 270 days, demonstrate initial operating capability on at least one challenge. The goal is a functioning AI for science loop online in less than 9 months. I think it would be impressive if they do this in a year from now. This also formalizes a federal AI stack parallel to the commercial one. So the order tells the Department of Energy, then the White House assigns office to align agency AI programs and data sets onto its platform, run joint funding calls and price programs, build partnership frameworks with external players, co-dev agreements, user facilities, data model sharing, IP rules. So now you will have Nvda, OpenAI, Anthropic, XAI, Google, the clouds, biotech, chip companies. They're all potential suppliers and co-developers for a Department of Energy AI system. It's a big news, right? It's a big deal for the whole sector, especially in the United States. If you want to become a huge powerhouse, AI powerhouse, but also energy powerhouse and science powerhouse, this is a huge shift towards that. And this question here at the end is the big one, right? Who are the suppliers? How IP and data will be shared, and how fast will other countries launch their own Genesis style efforts? And of course, if this becomes a mainstream thing around the globe, you can start to understand that we are going to go up and up and up and up on this growth cycle, right? Because if this becomes a thing in a lot of Western countries, Middle Eastern countries, they will need a lot of compute. They will need a lot of data center. They will need a lot of compute, a lot of energy. Still a long way to go. Still a long way to go, I would say. But it was a big announcement. It was a big announcement. Now we'll see. We'll see if they can meet the timelines that they've set. Less than 9 months is quite aggressive. It's pushing it a bit. I think before the end of 26 would be a great achievement. Would be a great achievement. Let's see some comments here. Let's see some comments that I might have missed. Oh yeah, let's do the poll. Let's do the daily poll right now. Will the markets stay green? Will stocks end the day green, red, or flat? Or flat. Let's see. Because yesterday the majority of you were correct. It did stay green. It did stay green. If I were myself, I would sell AMD, Meta, and buy Google. I wouldn't sell. No, I wouldn't sell. Especially not Meta. Like, why would I sell Meta right now? Meta is cheap. And again, the reason why Meta is going now with Google as well is because they are probably also seeing that, okay, Nvidia is now investing in OpenAI, Anthropic, some other players out there, and they're like, okay, you know what? Let's see what we can do with Google TPUs, right? Because if we can run workloads at, I don't know, 20% less or so than with Nvidia, why wouldn't we do it, right? This business this business will just become more profitable. Trailing PE 27, forward PE 20.8 times. Return on invested capital 29.1%. This is the 5-year average. I mean, why would I sell this business? I think there will be I would say 70-30%, 70-30, that Meta goes back to all-time highs by 27. And all-time highs were close to $800. Close to $800. I think this just becomes a more profitable company over time. And then, yes, we'll see what happens with this whole AI, VR ecosystem. I still think that the glasses and all of it will be a big success. Will take a lot of time to get really mainstream adoption and grow the developer ecosystem. I don't sell Meta. I bought last week and 2 weeks ago. More, not a lot, but I think all in all 5 extra shares, which is a lot, but it's not like I bought 20 shares or something. What do I think about Baba earnings? We talked a little bit about that before. It was a good earnings report. I like it. I still own it. I don't plan on selling right now. They're doing what they should be doing. They're doing what it should be doing. But yeah, what do we see? Of course, we had a huge drawdown. Okay, but this was too long ago. Right now, it's a 22% drawdown from the recent peak. Overreaction, it's just, again, the same story, right? It's the same, oh, they're investing quite a lot. What's the return on investment? Does it make any sense? Maybe they're going to overbuild, but as they've been saying, as the others have been saying, they rather overbuild than underbuild. It's normal. They talked about here. Let's see if I can find it. What did they say? Rent. No. Because they talked about the fact that there are people from the outside that come in and ask them if they can just rent out their compute. Let's see if I can find it. I don't know if they said IP or not, but anyways, even if they overbuild, I do think they can offer like a Meta cloud service platform or something like that in the future. But right now, a big winner is also these guys. Broadcom, right? Meta, Google TPUs. Broadcom is collecting the money here. Incredible performance by the business. Year to date, it's up 62%. Over the past 3 years, up 613% over the past 3 years, 863%. 863% over the past 5 years for Broadcom. Incredible. It's not a cheap stock right now. It's a $1.78 trillion company, trailing P 97 times, forward P 44.9 times. But revenue, earnings are all expected to grow quite rapidly over the next coming years. They are becoming a huge player here. I mean, Hock Tan has been doing an incredible job. Why is it up another 3.7%? Again, because of that Google TPU story. And thank you very much for the super chat. Good morning to you as well. Hope you have a great rest of your day, great rest of your week as well. Should I buy Meta or Google or add more stocks to Broadcom? Look, Meta and Google are cheaper than Broadcom, and Meta is cheaper than Google. Google just has a ton of momentum right now. But if you want to, yeah, it's Broadcom the most expensive, then you have Google, then you have Meta. 3 great businesses. Meta is the one that is still beaten down. for the reasons that I mentioned before. Broadcom, to me, I mean, I would not add Broadcom right now, just like I wouldn't continue to add to Google right now, because it has run up quite a lot on a lot of anticipation and a lot of announcements, justified. Meta is just, or Amazon. Amazon is also, I mean, I still think that Amazon is like a set and forget type of name until proven otherwise. But what is the drawdown now? Just 10% or so. You might say, oh, but look, forward P 30.4 times. Yes, I know. But AWS is going to continue its acceleration in growth next year. The year-over-year comparisons are just becoming easier here. 4 minutes until the open. 4 minutes. Let me pull this one up. Right, we have your AWS growth, 20.3%. So we have an acceleration. I think we will get another 20+% year-over-year growth next quarter easily. And then you have 2 quarters after that that's going to be quite easy. I think you can see 25%. I think you can see 25% year-over-year growth for AWS. And then, as you know, the faster growing segments, at subscription, advertising, third-party seller services, and let's put AWS there as well. That is right now a 105 points. Actually, no, let's put last 12 months. Sorry, it's better. Okay, if we look at Amazon's faster growing segments, which has also higher margins than just the online store, that's a $401.3 billion business over the last 12 months. Almost $500 billion. Yes, of course. A lot. Where is it? $121 billion of those comes from AWS and $166 billion from third-party seller services. But these are fast-growing segments. If you look at, let me pull this right here, right? Online stores alone is $261 billion over the last 12 months. But online stores over the past 3 years grew at a compound annual growth rate of 5.7%. The other businesses, which again are higher margin businesses, subscription grew 11.7% compounded. Advertising services, 21.8% compounded. Third-party seller services, 14.5%, and AWS, 17.5%. With Amazon, it's just a matter of when, not if, you're going to see the huge free cash flow quarter after quarter being generated from this business. And yes, I do think that eventually you will see a share repurchase program being announced. In the meantime, we have this cash from operations for the business has grown substantially over the last couple of years. And now the last 2 quarters, we've seen it actually jump a little bit. 2 minutes. So let me prepare myself here. Let's do this. Do wonder what the markets will do. Okay, we are prepared. If I have to pick Amazon or Salesforce, I mean, you know my question, my answer to that question. It's always going to be Amazon. Not because I don't like Salesforce. I think Salesforce is also cheap, but Amazon is Amazon. This was fiscal.ai. There is a link in the description. But if you wait a day, you will get a bigger discount. All right, we're getting ready for the open. Yeah, yesterday the VIX did fall. And apparently if it does fall like 10, 12% or so, the following day should not be a great day for the S&P. I don't know if there's much science behind this, but okay. Anyways, ladies and gentlemen, the market is open. Ding, 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 bing, bing, bong, bing, bong. Markets are open right now. We have moves across the board. We let it go for a couple of seconds so the market can figure out what the heck's going on. The heat map will be updated in a bit. We do have some reds. We do have some green here. As you can see, we have a small rebound from Novo Nordisk, up 2.2% back to the 45, 46 levels. Was previously the bottom that we've seen. Google is still up 1.42% right now. But we'll see. I'll let it go for a couple of seconds so we can see what's going on. What's my target price for Alphabet? Otherwise, at what price will you sell? I don't know. I don't really do, unless it's a trade where I'm literally just, I buy at a certain price and I say I'm just buying it because I think it's an overreaction. The moment it goes to that price, I'm going to sell. I don't usually have prices that I would sell. It's not the price that will be the problem, or the price will not be the reason why I would sell. It's the story. So story changes, then that's the reason to sell. But the price, probably not. Can I make a video about the company you used to own? Well, that video is going to be quite long because I used to own quite a lot of companies over the past almost 10 years. I don't think it's that. Maybe it might be interesting, but I don't think it's that interesting. All right. Now we have a better view. So what do we have here? We have Zeta that's still up. Whoops. Zeta that's still up 4.4%. Novo is up 2.5%. Meta is up 1.3%. PayPal. Woo! Am I seeing? Wait, let me put on my imaginary glasses. Let's switch this. To here. What is this? A wild PayPal has appeared. Would you like to use potion? What is this? PayPal is up 1.2%. Sure. Would you look at that? 1.4. Hopefully I didn't jinx this, but we shall touch wood and do some voodoo thing so we can keep the green. Google has a little bit of a pullback. Good. I mean, I would rather this not get super extended. So, okay, fine. Still up 0.5%. Reddit is up 1.5, still under 200. Interesting. United Health is back above the 100-day moving average. 1.45%. The local is green. Uber is green. Wait, things have changed too quickly here. Amazon is green. Oscar is also green, still at $16.5. Then let's look at some losers, shall we? Why am I not talking about Brookfield? Because one, I know it's a very good company. It's just very complex to simplify it all. I do believe that Emir, let me actually see if he did talk about it. One moment, please. Let's see if I can find. Is there a search feature here? There is. Brookfield. Yeah, he did talk about this. He did talk about Brookfield Asset Management back in August. Type F Capital. Emir, great guy. Big report here where he talks about that company. To me, it's just too complex to talk about it. But yeah, the execution, the performance, management has been quite good. For them. So the biggest losers today are AMD down 8%, CoreWeave down 6.5%, Nvda 4.7%, Applied Digital 5%, Nebius 3%, BMNR 4%, Iron 5%. Okay, those are the big losers, I would say. Those are the big losers right now. Then you have Hood that's down a little bit. Micron is at 1.6%. By the way, for Micron, those HBM memory players, they don't care because everybody needs memory. Pagaya is down 1.8, still around $23. Palantir 160, Duolingo 171, SoFi still $27, AST one down 0.7, Rocket Lab down 1%, back at $42 per share. Marvell down 1%, Rubrik down 0.5, Intel 0.7, Sezzle was green, now red, 0.5. Melly is back at $2,000 per share. Melly is back at $2,000 per share. Shift 4 is here at down 0.5. Adobe is flat. Oscar is now green. So chips player, it's AMD, Nvidia that take the biggest hit. As for the Neo clouds, we do have here CoreWeave down 7, Iron 5, Nebius 3.8, Hut 8, Pizza Hut 3.5, White Fiber 2.2, Cypher down 2.2 here as well. Fintech wise, Hood is down 2.3, Pagaya 2.2, SoFi 1, Webull 1.1, Sezzle and dLocal, let's call it flat. And for a strange reason, PayPal is up 1%, although I don't know how long that will last, but it is what it is. Chime did have a nice rebound from around $18. We're back at 19.6. It does face that 50-day moving average. We'll see if it can go above it. Previously, that did fail. Dave is above $200 per share right now. Now, with AMD, in order for people to be satisfied, it still needs to go down another 14% in order for it to fill that gap from the OpenAI deal. Me personally, if we do go back to 170, then I think I'll jump back and not jump back in because I still have it, but I think I'll start adding if we do go this low. Because then you go back to the pre-announcement of the OpenAI deal and you say, you know what? If it happens, it doesn't happen. If it happens half, at least I'm paying less, right? Because if you bought after it, you bought because of that announcement. If you bought at the prices before that announcement, then at least you're paying the price before we knew this thing was going to happen. And if it does happen, great. I think you'll be paying a good price for that. PayPal doing the daily rug pull as usual. I know, right? I know. But yeah, another 14% or so downside for AMD. I don't know if it is going to happen. I'm just showing you what it needs to do in order to fill that gap. Do we have something for Nvda? No, other than the 200-day moving average being much lower. But other than that, no, the previous bottom was also around $165 or so, where we see a small rebound back in September. How low can we go? I don't know. TSM, also a little pullback. I don't know why. Everybody's still going to use TSM, so that's strange. What did Alibaba open at? Now it's down. It was up, now it's down. So we're back at 160. Back at 160. CoreWeave is, still oversold, still dropping. How is it still dropping? Again, I think CoreWeave is just very close to Nvidia, to OpenAI, and that's why the sentiment around this name is like this, despite them making it very clear during the last earnings call and an analyst conference that no one customers makes up more than, was it 20% or something more than that. So they are diversified, but the market still doesn't like it. I mean, same here. Iron right now still down 4.4%. Nebius down 4%. If you go watch the interview, you'll understand why I am very bullish Nebius and why it is different and why software does make a big difference, especially for them. Question about Adobe. Adobe is at $318 right now, not really moving, not really moving. What's my opinion on them? It's very cheap. It's a very cheap company that is still expected to grow double digits, low double digits, but still expected to grow. It's very profitable, high margins, but the market right now again is saying, okay, but we don't know AI wise. We might think it's getting disrupted, right? Trading PE 20 times, forward PE 14 times, margins incredible, free cash flow margin, operating growth, all of it incredible. Return on invested capital 22.4%, still expected to grow top and bottom line again. I think low double digits is going to be the case. But yes, sentiment around this is very bad. Sentiment around this is very bad. It's not reflected in the numbers. Right? If you look at Google, if you look at total revenue growth over the last 10 years, maybe too much, over the last 5 years, it's been 13% compounded growth. So it's a good company. It's a very good company. I don't own because I can't own everything. I like to own other names. And what interview? This one. Go follow Daniel on X. He posted this interview right here. It's 54 minutes long, but it's worth it. It's worth it. Iron movement still tied to Bitcoin. Actually, maybe let's check that. Let's check that. I think you might have a very good point here for now, right? Because for now, it's true that AI cloud is not really making up that much of the overall revenue. Bitcoin today is down 1.6%. Yeah, maybe so. But it is true. It is true. If we do get a December cut, isn't this the perfect December with a lot of potential buys? Well, again, we also will get more economic data, something that we didn't get. So if we do get a cut and the economic data is maybe better than expected, then yeah, it might make up for a good Santa Claus rally. Although late December, as you know, a lot of people are going on vacation, holiday, not a lot of volume, but who knows? But it might be a good way to end the year and start 2026. Because if in 2026 we get, again, more rate cuts and it seems like GDP growth is much better than expected, if it seems like inflation is under control, again, best case scenarios, right? Inflation is under control, rate cuts are coming down, it does its job with regards to unemployment. Unemployment still stays well below 5%. Then I think 2026 could be another great year. Could also be the other side, but we'll see. We'll see what happens when the numbers come out and when we get rate cuts. Remember, something that we've said for a while, the longer you can stretch the rate cutting cycle, it's the longer you can stretch a bull market. Unless, of course, you're forced to cut very fast because you are facing economic struggles. Then it's not great. But for a recession to happen, you need 2 consecutive quarters of negative GDP growth, which we're not getting anytime soon. Yes, maybe because of thanks to AI, it's possible. That's not to say that there aren't sectors in the US economy that aren't in a recession right now. I think housing is one for sure, but that can be solved by just building more and pulling down the rates. Yes, definitely there are some sectors that are facing a lot of pressures right now, for sure. For sure. Okay. Yes, we are selling off. Although Novo Nordisk yesterday has seen quite a lot of buying, it seems. There's a big volume green candle here from yesterday. So again, rebound area, $45. Reddit is still green. Zeta is still green. United Health is still green. PayPal is green. I mean, if PayPal is going to be green every time the other names are red, sign me up. Sign me up for that. But yeah, we are seeing some pullbacks. We're seeing some pullbacks. Again, yesterday was a pretty good day in the market. But then again, we're still nowhere near where we were a week or so ago for a lot of these names. It's fine. We're also not getting a GDP, the GDP number, so that might affect some things here. Let's see if we missed some news. Did I buy Novo? No, I did not buy. I did not buy Novo. I explained a couple of times why I'm not buying it. It's a turnaround story, and a turnaround story that's going to take a while, and I have enough of those, right? I have enough of those. It's the same with Nike. It's a turnaround story, but then again, I'm not that interested. Not that interested in that. Let's see what we have. Oracle. Yeah, we can look at Oracle, what they've been doing. 1 second. Okay, we didn't miss anything. Fine. Oracle. Oracle. Ooh, wow. Oracle is also down 7%. Down 7%. And yeah, as I said yesterday, so we closed out that huge gap, right, from the previous earnings report. And it seems like we're going to close out the June gap here as well, which means to go to 180 darts. What a sport, if you can call it a sport, but what an event. Has to drop another 3-4% for good measure, let's say, to close that gap right here. It is oversold on the daily. On the weekly, it is not. On the weekly, it is not. Yeah, maybe a revisit at the 100 day. Couldn't be that bad. We do have mid-December, the next earnings report. Okay, that's going to be a very interesting one. That's going to be a very interesting one. Mid-December Oracle earnings report. Let's see what it's trading at right now. Actually, let me close the poll so you cannot manipulate everything. So we have 40%, 40% green, 39% red, pretty even there, and then 21% flat. Okay, not bad, not bad. Oracle, 46 times trailing earnings and 28.3 times forward one. But of course, the big problem that people have with Oracle is the debt, and well, how sure are they with regards to the upcoming revenue, right? The last time they reported, this was basically this RPO, $455 billion, huge increase, expected to surpass $500 billion in Q2 fiscal 25. This represents a 10x increase in fiscal year 2022. So yeah, the market is skeptical about that. The market is skeptical about the relationship with OpenAI, and the market is skeptical about the amount of money that they will need in order to achieve all these goals. So yeah, we'll see. We'll see what happens. This is definitely a story that we need to follow closer. But we will, of course, we will, when they will report earnings. I don't own it. I don't plan on owning it. We'll see if it can go to 180, close that gap right here, and then we'll see if we get a rebound closer to the maybe after the earnings report. Aha, PayPal is back under, being up 1%, so not getting that much love, it seems. Oh, but it's better than being red. No need to be greedy. No need to be greedy, right? With regard to PayPal. And let's see. Oh, wow. CoreWeave is down 10% now. CoreWeave down 10%. So we're now having a 50, 56, 57% drawdown crash from October, mid-October. Applied down 9. Wait. Okay, still here around that 100-day moving average. AMD, like I said, still has some ways to go. It can to fill that gap. Iron 7.7, which literally is a price we've seen yesterday. CoreWeave is at the price we've seen last Friday. Nebius is at a price we've also seen yesterday or last Friday, but it is under the 100-day moving average and CoreWeave. Nebius, if you want, it still has to go down 22% to close the gap right here before the Microsoft deal was announced. It did close a little bit of that gap Friday, basically a quarter, close to half. If that happens, I mean, I'll be loading up for sure. Nvda 170, 165. We'll see what happens with that one. What else? Any other crazy moves? Probably not. Yeah, the usual. Figma. Figma is down 4.6% today. Okay, I guess they're also in the cloud business. Figma is back to $34. Klarna is under 30 again, same price as Friday. And the firm is green, back above the 200 here. Good. Walmart, yeah, what did they do? So big jump after the earnings, didn't survive, but still here at 105. Someone did comment here about Walmart here. Why September data more important than recent Walmart sales, more recent data? Well, we are waiting for the next time we'll get the data is of course in December. We're not going to get the October ones, but I agree that the numbers that we did get from Walmart are in the comments are still good, I would say. Not every player that reported these types of figures and comments, but Walmart is a pretty big player, especially in the United States. So I do like the numbers that they provided. Netflix. Let's see what Netflix is. Was still 100, no? Yeah, 104. Still 104. Yeah, I mean, I like Netflix. I'm kicking myself still for not buying it in 2022, but it is what it is, my friends. It is what it is. Symbotic is up. Yeah, they reported yesterday or today. Yesterday after hours. Wow. The heck happened here? Symbotic is up 35%. Okay, let's see. Let's see if we can find something. Ba-ba-ba-bum. So revenue exceeded expectations with strong gross margin and free cash flow gains, capping off an expansion of momentum into 2026. Okay, well, congrats, because I know a lot of you have asked me quite a lot of times. What about Symbotics? What about Symbotic? I did cover it. Looked very promising. Didn't own it because, again, can't own everything. But congrats. Congrats on the performance. Let's see if we can pull up. So revenue up 10%, full year revenue 26% year-over-year growth, backlog $22.5 billion, still a small loss, net loss. Revenue from software did increase 57% year-over-year growth, year-over-year. For the first quarter of 2026, they anticipate to grow 25 to 29% year-over-year revenue and adjusted EBITDA between let's call it 52%, 51.5%, $51.5 million at the midpoint. Okay. Okay. Congratulations. So we do have a little bit of a recovery. Core Reef is now only down 7%, 7.5. I just sold all of Rubrik. Or why would you sell 2 weeks before earnings, if I may ask? Or maybe you bought something else, or just tax loss harvesting. I'm going to sleep. Well, good night, or maybe good nap. Naps are great. Yeah, but I'm telling you, man, we should not be. Let's not jinx this. Let's not jinx this, because you never know. You never know with the pain pal. Because it was on margin. That is indeed an issue. That is indeed an issue. I still think Rubrik is going to have a great earnings report. Great earnings report. Even last quarter was a great earnings report. I mean, revenue was up, what, 51% or something like that? So at these prices going to the report, I think we'll be fine. Reddit is up 5%, back above $200. Novo 3.6, Zeta 3, Oscar also 3%. Very nice. Yes, I did put on a red shirt because I was going to try something very scientific. Is if I put on a red shirt, what would happen with PaintPal? Currently, the sample size is very small. It's just 1 day. It's red shirt, green PaintPal. We'll see what happens in the upcoming days. We'll see what happens in the upcoming days. CRM is up as well. Meta is up 2.3%. So you had a couple of days to buy it under $600, and now we are going back up. This is basically the heat map at the momento. This is this. You never walk alone. You'll walk alone if you keep losing games week after week. But yeah, tonight's a big night. Tonight's a big night. You have Chelsea playing against Barcelona in the Champions League. That's going to be, maybe that's why PayPal is green. Because I cannot have both. It's either my team performs well and the competition performs badly, or the stock market goes up. Cannot have both. But I'll take a small portfolio hit if I can beat Barcelona tonight. And yeah, I'll definitely take a small hit for sure. Are we going to talk about Man United losing to Friendly Fire red card? Yeah, I mean, it was the first time I saw this happen. Man United played at home against Everton yesterday, and Everton player got a red card because he hit his own teammate. Slapped his own teammate. First time I'm seeing this. And they still won the game. Everton still won the game at United. First time in, I think, 33 games or something like that. Barcelona, easy win. Where's the block button here for you, Max? Let's see. Block user. But yeah, big game tonight, big game tomorrow. Man, Lamine Yamal is not even going to get past Cucurella. He's going to get his legs kicked out, sent back to Spain via FedEx. So he's not going to do anything. So yeah, big games, big game tonight, big games tomorrow. Um, Tomorrow there are PSG, Tottenham. Okay, it's not really a big game, but on paper it might be interesting. Liverpool, PSV. You have Arsenal against Bayern München tomorrow. That's a very good game. And then Atletico against Inter. Okay, tomorrow is a. Why couldn't they put this today as well? But it doesn't matter for me because today there's only one game that matters. Yeah, nothing else. Marseille Newcastle might be a good one. Did you know that Greenwood is top scorer of Ligue 1? I didn't know this, but now I know. Um, Jamal overrated. He's a very good player, but he does he's very an arrogant twat. But I don't care. I don't care. So yeah, overall, this is the market right now. We have some reds across the board. AMD down 8, CoreWeave 7, Nvidia 6, Applied 6, Iron also 6, Nebius 5, BMNR 4.6, and then we have the others that are down 1 to 2%. Hood, Rocket Lab, Palantir, AST, Marvell, Micron, Duolingo, Intel, SoFi, Pagaya, Adobe, Uber, the local, Shift4, and Rubrik is basically flat. As for the greens, Reddit is up, let's call it almost 6, Novo 3.5, Zeta 3.5, Meta 2, Google 2, Oscar 2.3, United Health 1.8, CRM 0.8, HIMS 0.8, PayPal 0.8, Amazon 0.3, same with a new Sezzle flat. So that's it. That is it for now. Not the greatest day, but then again, yesterday was a very good day. Yesterday was a very good day. I guess we cannot get back to back green days, back to back rebounds. But okay, I'll tell you tomorrow and the day after that and the day after that if I have to put up red shirts every time in order for PayPal to go up. I am also a reason why Abercrombie and Fitch did beat the earnings results. This is from Hollister. Apparently, I am contributing here to the cause. Contributed to Google as well with my Pixel phones and my Gemini account. So I'm doing what I can, to help out these struggling shareholders out there. But anyways, short week tomorrow. Wait, tomorrow is Wednesday. Tomorrow we still have a normal day. Thursday it's closed, and then Friday half a day. So pretty low volume is to be expected. I don't think we're going to get crazy moves, but then again, you never know. You never know. So we'll be back tomorrow. I'll have a short recap video later today talking about this whole Google Meta and Nvidia AMD story. And yeah, that's it. And then we'll have a nice Champions League evening, hopefully with good results for me, bad results for you, Barcelona fans. Hopefully, I have no Barcelona fans in my chat, but if I do, see you back tomorrow. Anyways,